Hello. Hello.
Please, sir, this ACC311 we're having.
Have we started? I can't hear anything.
Good evening, everyone.
Good evening, sir.
We have been waiting for a very long time now. It was just very few people
Good
that
evening, sir.
in the class. So I don't know. What should we do?
Let's start. They will be joining
Please,
us.
let's start. They will join.
Exactly. And the recording is available. So anyone that missed, you can make reference.
Okay. The plan we have for today initially was to be able to treat up to like 2 topics because of time. But from the way the whole thing is going now, I don't know if after this maybe after my 6:30 prayer, maybe we can come back since the other class will not start until 9 o'clock. What about that?
That's fine. That's fine. That's
Okay.
fine. That's fine.
Sorry, I didn't get you. You say what?
Ideally, the class supposed to end by 7.
Yes.
So I'm not saying since we have wasted much time, this is 22 minutes past 5.
Okay.
And we're just about to start. We've wasted like 22 minutes already. So since the other class will not start until 9 o'clock, can we just proceed maybe after my 6:30 prayer that time? If I come back, then we can continue. Because I want us to touch. I had so many requests on what do they call it? Branch accounts and then partnership. So I was thinking if we can treat the 2 topics today.
Okay.
So what do we think about that?
That's fine.
That's fine.
That's fine. That's okay.
All right, good. Straight into the business. Branch account is just similar to what did they call it? Departmental account we treated yesterday. branch account is similar to departmental account, but the only thing with branch account is like an organization that have branches in other places. So it could be, one place or the other, and they keep their own record. So briefly, the branch accounts are prepared in two different ways, majorly. And one of it is if the branch keep its own record, maintain its own record that is independent of the head office. That is one. And then the second one is if the what did you call it? Hello?
Branch.
Yes, if the
Head office.
the head office maintain the record of the branch. I think these two main methods is clear.
Yes.
Two methods of accounting for branch accounts, branch transaction, where head office maintain account of its branches. That is one. Second one is where branches maintain their own accounts. So the second one, where branches maintain their own account, we don't have issues there because they will prepare the account independent of the head office. Just normal account, as if they are a different entity on their own. The only difference is that they will just have a way of reconciling the current account. That is the transactions between them and the head office. But where headquarters, that is head office, maintain account of its branches. So there is also two situations under this particular method. I'm explaining this so that when we come into the calculation, we're starting the calculation immediately. So that when we are doing the calculation, we'll be able to understand why we are doing what we do. So under the first method, where head office maintain account of branches, there are two methods under it too. One of the method where headquarters maintain account of branches and send goods to branches at cost price. Second one, where goods are sent to branches at price other than the cost price. So these two concepts are clear, right?
Yes.
Please, can you rephrase, please?
Okay. I said there are two major methods of accounting for branch transaction. One is where headquarters, head office maintain account of its branches. That is one. Second one, where branches maintain their own accounts. That is the major two broader groups, two broader methods. So out of the two broader methods, the first one, where head office maintain account of its branches, it's also subdivided into two again. One of it, where head office maintain account of its branches, where they send goods to branches at cost price. So it means they are sending the goods to the branches at the price they bought them. They are not adding anything.
Okay.
Yes. So the second, the group B, that is the second part of it, of that first method, is where the goods that they are sending to the branches is at prices other than the cost price. So that is where all this markup, profit margin comes in. I think this one is clear.
Okay. Yes.
So now, from this our material here, they did some example, and we want to consider two examples there. One is the one that is giving the very first method that is not what do they call it? Where they are sending goods at markup, that is first price. Then the second example, that same question was lifted from the course material. It's there in one of the past questions, question 2019 semester 2.
Okay.
If we have the question paper, 2019, semester 2, question number 4. Question number 4, the lifted is direct from the material. So we'll consider that also. So I want us to look at this illustration. Can we see that on our screen?
Yes.
Somebody complained about using this material as in reading from the material. I don't know. Is it not okay the way we are doing it?
It is so. It's okay.
So if there is any suggestion, the person was, I do not really get it very well. Yeah? Okay. Okay, somebody is asking whether it is, the revision is for ACC311. So from this question, can we see the question? Temilade Limited. Hello.
Yes.
Yes.
Hello.
You can
From
see it.
this
Can see
yes.
it.
So
Yes.
what I want to say now is there are methods where goods are sent to branches or whatever, where goods are sent to branches at price other than the cost price. That is the second method of the second category of the first method. I think my English is correct, but the second category, the second division of the first method. You know, we have first and second method.
Yes.
And we say the first method is also subdivided into 2 again.
Okay.
So the second division is when you maintain a memorandum, there is memorandum column method under that first method. There is memorandum column method and then adjustment account method. Yes.
Okay.
So the adjustment account method it's is the one where you're using this particular we're using memorandum method now. So the memorandum method is usually represented in columnar form. One of the column will come with the what do they call it? The cost price, then the second one will be the memorandum price. So let's look at this question quickly. It's not much, but it's it contains a lot of things that will make us to understand this particular topic. If we understand this one, other ones will be somehow easier for us from the way I've seen it. So let's read the question quickly.
Okay.
Okay. Temilade Limited. Temilade Limited operates a branch at Ikeja. So it means the head office is Temilade Limited, isn't it? So all purchases are made by head office in Ikoyi, and goods are invoiced at selling price. So it means Temilade bought those are goods, but it's invoiced it to the branch at Ikeja at selling price. It means it's not sending it to Ikeja at cost price.
Yes.
Okay.
Yes, in this one, it means yes, it means there is a margin. So they now further tell us that the selling price being cost plus 50%. Supposing the cost is 100 naira plus 50% means what? 150 naira.
Yeah.
So that's what it means. So the following information was given for the year ended 30th September 2000. Cash sales 98,550, credit sales 315,000, goods sent to branch at invoice price. So let's take attention. Let's pay attention to this. goods sent to branch at invoice price 562,500. So the invoice price is cost plus 50%, 50%, isn't it?
Yeah.
Return to,
Okay.
yes, return to head office. Return to head office at invoice price. What do you understand? What do you understand by that?
Means the cost price plus the
Return
50%.
No, when they
At
say return to head office,
return outwards, is it?
yes, good return to head office. Maybe maybe you send a 500 quantity and you return maybe like 100 or 50 quantity back to the head office.
Okay.
That's what it means.
It will be subtracted.
Yes. So let's get this concept very clear so that we'll be able to understand it. Stock at close at invoice price 140,625. So it means at the end of the day, after selling everything, the stock that is remaining with the branch is 140,625. Then goods stolen at invoice price is 450. They also stole some goods. Where did they stole the goods?
At the branch.
At invoice price.
At the yes. Where?
At the branch.
At the branch. Good. Cash stolen at invoice price 1,350. So they also stole. They also stole cash. They also stole cash at invoice price. Is there anything like invoice price for cash?
No.
But the question is telling us. So they want to test our understanding whether, because that invoice price has to do with anything that has to do with goods.
Yeah. Okay.
So they also told us allowance of selling price 900. This allowance of selling price is like a situation where the head office give the branch office an opportunity probably to reduce from the price they are selling to a customer. Maybe this person, yes, maybe this person is my old schoolmate.
Like a discount.
Yes, like a discount, sort of. Like a discount. So, but in this branch, whatever, that's the language, the terminology they use. So you are required to prepare the necessary accounts in the books of head office using memorandum method. So the memorandum method is.
I didn't get to my network bad. Please, sir. Hello, sir.
Hello.
Please, the explanation you gave just now, I didn't get it. My network went bad.
Which part is that? Okay, you mean about the memorandum? Hello.
Our network is poor.
I guess there's allowance of selling price. That was where
Yes.
So who is asking the question now?
Hello, sir. Yeah, it's about the memorandum.
Yes. So memorandum, when they say you should use memorandum method, what they
I'm
say.
the one to look back.
Okay,
I
thank
didn't
you.
get the explanation.
Okay. This is the explanation. When they say, when they are preparing branch accounts, they usually indicate the type of method to use.
Okay,
so
sir.
This time around, they are telling us to use memorandum method. And I said,
okay, sir.
Other methods, you have only single column accounts when you are preparing them. But in memorandum method, you have 2 columns, as you can see from the screen. Can you see the account illustrated on the screen? The format.
Okay, sir.
Yes. So that is the memorandum format. So
I
it
can
usually
see.
have two columns. Yes. So what this simply means, before we go into the solution, what this simply means is that the first column we're going to have, you see, is invoice price is written there. Can we see that?
Yes.
Invoice.
Yes, invoice
Yes.
price, and the cost price. Invoice price and the cost price.
Okay, yes, sir.
Okay, so those are the two columns we have, and we're going to have it on both
Yes.
debit and the credit. We're having it on both debit and credit.
side.
Yes, debit and credit. So now is for us to identify the items that comes to debit and the items that comes to credit. And this is a simple logic. Have it at the back of your mind that this memorandum account you are preparing is as if you are preparing it for the branch. You are actually preparing it for the branch. So you will now be considering, you'll be putting into consideration that it's the transaction the branch is carrying out. So anything that has to do with the branch. So let's go to the first part of the information from our question. You know, like I said, we're going to run through this one quickly. From this question, the first item there is what? Cash sales. Cash sales. And the cash sales is 98,550. Are we together?
Yes, sir.
Okay. The cash sales is 98,550. In the invoice price, you know that one is cash. You know, I asked one question the other time. They say in the question, when they say cash stolen at invoice price, you remember this particular aspect, cash stolen at invoice price. And I'll say anything that has to do with cash is not, there is nothing, it has nothing to do with whether invoice price or selling price or cost price. Shall we get?
Yes.
Good. So cash sales now, it has nothing to do with whether invoice price or not. It is cash, strictly cash. It is not goods. So for anything that has to do with goods, so that is the one we're going to translate into cost price. So cash sales at selling price, it will, in our memorandum book, is coming to the credit sales. Let's look at this memorandum book like this. The branch office at Ikeja. If anything the branch office received, assume that that thing is coming to the debit side of the book. Anything the branch office received from the headquarters or wherever is coming to the debit side of the memorandum account, memorandum stock account. Like if they send goods to the branch, it's coming there. So, but anything that is capable of reducing from the goods sent to the branch will come to the credit side. Is this understood?
Please repeat.
Anything the branch received from the head office will come to debit.
Okay.
Anything that is capable of reducing from what the branch has received from head office will come to credit. It's just the opposite now, Shay. Do we understand this?
Yes, right.
All right. So we're told that goods cash sales It means we have sold some items from the items received. So that cash sale is coming to the credit side, because if you sell some goods, it's a reduction from the good you receive now. So that's why it's coming to credit. We also, that is 98,550. And because it is cash inclined, it is not good inclined, the cost price is also reading 98,550. Is that clear?
Okay. Yeah.
Okay, now, they now say credit sales. Credit sales. The credit sales is 315,000. So the sales you have made on credit. So this credit sales, there is another account that will represent this what you are selling on credit. You see, open another account for credit sales. So the credit sales is 315,500. 315,000. So it's also a reduction from what you have received from headquarters. That's why it's coming to the credit sales. Sorry, it's coming to the credit side. The next item is goods sent to branch at invoice price. So that is goods received by the branch from the head office. So now that one will now come to debit side of the account as 562,500. But let's take note. The good sent to branch at invoice price is price, what do you call it? Is cost plus 50%. It means we have added 50% to whatever the cost is. So the goods is how much? 562,500. 562,500. If you want to get the cost price of these goods, you're going to multiply it by 100 over 150. Whatever it gives you, that is the cost price. So if you say 562,500 times 100 divided by 150, it gives 375,000. I want a response on this before we proceed. Do we get this aspect?
Yes.
Hello, sir. Please throw more light.
Okay.
I thought at first the invoice price plus 50%.
So, and I said the invoice price, supposing the invoice price is 100 plus 50% is going to be 100 plus what? What is 50% of 100? 50. So
yes.
it now become what? 150.
Yes.
So it means if you want to get profit from there, your profit is going to be 150 minus 100, isn't it?
Yes.
Which is 50. Your profit is 50. If you now remove the 50 profit of 50 from 150, what do you get? 150 minus 50.
100.
You get 100. So it is 100 that you will now be using as your cost price now of 100 of 150. That is the selling price. Do you get it?
I did not get it though.
Please mute everybody.
Okay, this is the explanation. This is the most important part of the solution because it applies to virtually all the aspects of the question. If we get it clear, I think we are good to go. They said from the question at the beginning on this part, they said all purchases are made by the head office in Ikoyi, and goods are invoiced at selling price. So goods are invoiced at selling price, being cost plus 50%.
Okay, cost plus 50%.
50%. So if they say cost plus 50%, that means the cost is what? 100% now, Shay?
Yes.
On cost is 100%, and plus 50%, making 100% plus 50%, making 150%.
Yeah.
So that 150% is the selling price.
Okay.
Just write that. 150%. 150% is the selling price. 100% is the cost price. 50% is the profit or the margin. Profit or margin. Is that clear?
Yes.
It's clear, right? So now we don't want to recognize the goods received. We don't want to recognize the goods received from headquarters in the branch at the selling price. We want to recognize it as...
Sorry, Mr. Abdulaziz, I want to ask a question. Sorry. Since the cost plus the margin is 50%, and we are assuming that the cost price is 100% plus the 50%, that's what makes it 150%. In events that is the cost plus is like 20% or 30%, are we still going to assume that the cost price is 100%?
Exactly. Since since something is giving you based on percentage, you always assume that the cost price is 100%. You always assume that the cost price is 100%. I just sent this my explanation to the chat box now.
Okay.
This 100% selling price. 150 selling price, 100% cost price, and then the profit is 50%. So now, this is the explanation. What we want to achieve is that we don't want to recognize those goods received from head office at selling price. Rather, we want to recognize it at cost price. But the question did not give us cost price. The question only gave us the selling price, which is the 150%. Profit is already included. The price that the question gave us, which the head office is invoicing that particular thing, sending the goods to the branch, is already capturing profit. So we want to eliminate the profit aspect of it. So to do that, from that thing I sent, from what I sent, it is now, you will now discover that have we seen what I sent now?
Yes.
So you look at it, look at the bottom first, the one below. The cost price is 100% based on our assumption.
Okay. Yes.
They are now telling us they issue it out at cost plus 50%. So that means we are adding, they've already added 50% to it. If they add 50% to 100%, it's making it 150%.
150%.
So that is
Okay.
selling price is 150%. Cost price is 100%. So if we want
Okay.
to get the cost price now, what do? We extract the component of the cost from the selling price. That is the total price. So, and that is the reason why I have decided to get 100 over 150 of 562,500. Is this clear?
Okay, this
It's clear,
100 over
Mr.
150 is the cost price. It's the
Yes.
cost price we are calculating now, right?
Yes.
Okay. So,
and
if
this
we
is
want to get the
this is
selling price,
yes, because no, they've given us the selling price.
already. Okay, this is for us to determine the cost price. Okay.
Yes. So
You
this
are to
100.
get the cost price.
So to get this is 100 over 150 we are going to use throughout our solution. That's why I say is important in this our solution.
Okay.
The language used in the question. Sometimes they will say markup, sometimes they will say margin and all these things. But this one is a straight one. They say cost plus 50%. And we assume the cost. If the cost is X plus 50%, it will be X plus 50% of X, isn't it? So let's proceed.
So when we hear margin, we should just add, and when we hear markup, we just subtract, right?
We'll still come back to that so that we'll not get the whole thing confused.
You know, it's a topic in accounting on its own. It's there in mathematics also. I just want to get the
like this. I found the one in the textbook easier than the one you are using.
Okay, which one is the one in the textbook? Okay.
Yes, that you determine the profit element. The profit is 50%. You just say 50 divided by 100 plus 50, which is 50 divided by 150. Then you arrive at 1 over 3. Then cost is 1 minus 1 over 3, and you get the 2 over 3.
Please,
Yes.
how did you get your one based on the
Constant.
textbook, on the material?
That is the markup and the margin.
Let's continue with the one we are doing now.
Divided by
What
100
is this?
plus 50.
Please, let's continue with the one we are using.
Let's continue with this first.
Okay,
Let's continue with this.
you see the one in the course material is supposed to be 1 minus 1 over 3, isn't it?
Yes.
But they did 1 over 3 minus 1, which is wrong.
No, it's 1 over 3.
Okay.
They made it a fraction.
number,
They give
one
the whole number a fraction. That is 1 over 1. They
I
make
said
it fraction.
if you want
They
to
use
determine the cost price based on this fraction, we were using percentage now, Shay.
exactly.
I'm using percentage so that it will be easier for us.
Yes, I understand
Yes,
your effort.
So this
There are some
percentage,
things, if you try and look out the origin of it, you may get confused. So there are some
Please,
topics or
let's
some
move
certain
this
aspects.
forward before going to
You
another
just
method.
assume.
so now we're treating what now? Goods sent to branch at invoice price 562,500. So what we're going to do is this. The invoice price is always the same thing. The invoice price is always the same thing. So on the first column, which is the invoice column, we're going to enter our 562,500 direct. Then on the cost column is the one we'll now use our percentage, which is 562 times 100 over 150.
Okay.
100 over 150 is the same thing as 2 over 3. 2 over 3, right?
It's 1 over 3. Then we next it from the cost. That's the 100%.
So is that clear now? Should we proceed?
Yes.
Yes, you can proceed. Yes.
Return to head office at invoice price. So this one now, goods, the Ikeja branch, from the goods they receive from the head office, they return some part of it back to head office at Ikoyi. So that one, and I say anything that is capable of reducing from the goods that you receive. I say any good you receive from the head office will be on the debit, isn't it? Anything that is capable of reducing from what you have received will come to credit. So this time around, so this time around, you are the head of the branch is returning some part of the goods to the head office. So it is a reduction from what they have received from the head office. That is why it is coming to the credit side. And then invoice price, they say it is at invoice price. The invoice price is 5625. Goods returned is going to be 5625 times 100 over 150. What do we get?
$3,750.
3750. I want us to be working this thing so that in case if the material make mistake in the calculation, like what we discovered yesterday, sure you remember that they wrote 700 instead of 500.
Abdulaziz, you said 5625 times 50 over
No, times 100 over 150.
Times
We're going to
100
use,
over 150.
yes, we're going to use 100 over 150 all through.
Okay.
So we got 3725. Sorry, 3750. So like I say,
Yes,
the invoice price will come to the invoice, whilst our calculation will now come to the cost price. Is that understood?
Yes.
The next one, let's go to the next one. Stock at close at invoice price. Stock at close at invoice price.
closing stock.
Yeah, that's closing stock. If you like, you can bring it now, but it's advisable you bring it at the end, isn't it?
Yeah.
So let's KIB this. Let's keep it in view. We'll bring it later. So we also have
Goods stolen at price.
goods stolen at invoice price is 450. So all these things, we know the reason why they are coming to credit, Abby.
Yes, because they are
going to reduce
they are reducing from what you have received.
From
Yes.
the head office.
Yes. They're reducing because like that's 14625 that we KIV, that we keep in view, is supposed to be what will remain in the store at the end of the day after all these things, after all these reductions in the stock. So goods stolen at invoice price. Like this one now, you know, it is not cash. It is the goods they stole.
Okay.
So under the invoice price is going to be the same 450.
Okay.
Yes, it will be the same 450. So, but when it comes to the cost price, it will be 450 times what?
100 divided by
Over
150.
100 over 150. Don't forget, it is 100 over 150 we use all through. When you calculate that, what do you get?
Because we are determining cost, Abby.
Yes, exactly. And I said the only items you will not determine cost are those items that are cash in nature. Is that understood?
Okay.
Mm.
Yes.
So, and then this, what do they call it? 450 times 100 over 150. What do we get? We got 300,
300.
right? 300.
Yes.
So we've seen all we've entered the two sides. Then the next one is
Allowance of
cash
selling
stolen.
price.
Cash stolen at invoice price.
Okay.
Cash stolen at invoice price.
1,350.
1,350.
Like
so
we said, there is no invoice in cash.
Yes. There is no cost price in cash. It's just physical cash. It's cash inclined. So anyone that is cash inclined, it is the same amount that you have as invoice that you still have as the cost price.
Okay.
So look at our cash sales. You can see that we did not, what do they call it? We did not change the cost price, isn't it? So after this cash stolen, after this cash stolen at invoice price 1,350, we also have allowance of selling price. And I said this allowance of selling price is like what do they call it? Like amount you decided to reduce from what you are selling the something, isn't it?
Yeah, like a discount.
Yes, a discount. And like I said, this one does not even have anything at all. It does not have anything at all as the cost price. Is that clear?
Yes.
So now, at this junction now, we've exhausted all the items in the question. We've exhausted all the items except one, which is the closing stock.
Price again.
What
Because
do you say?
can you take it up? Because on the invoice price,
We can't hear you.
I said, please, what it to cost price, allowance of selling price.
Yes.
Why are we not putting it on cost price?
Yes, because it is not an item. It is not what do they call it? It is not an item per se. It is just like a discount, like somebody mentioned earlier.
Okay.
Just like a discount.
Okay, thank you.
So after this, before we close our memorandum branch stock accounts, we're going to bring in our closing stock. Are you there?
Yes.
You discover that in the material, the closing stock was brought. They did not bring in the closing stock before they close the account.
Yes.
It's a mistake.
Okay.
It's supposed to come immediately under allowance selling price.
Okay.
Yes, that's the balancing figure. So is it clear at this point now?
Yes.
Now it's clear. Also, now in a situation whereby we were not giving this closing stock, that is stock at close, it means we are the one to calculate it.
Okay. How are we going to calculate that?
It's just like, this our memorandum book is like a cash book now. We'll just balance it.
Okay, and the docs.
Okay,
yes.
The difference will be the closing stock.
Yes. When you have stock and you and the stock keep reducing and all that, at the end of the day, what will remain is the closing stock now, Shay. So if you add all these items on the invoice,
Yes. Okay, is that why they put it in the materials, balance carried down?
it's supposed to be, the balance carried down supposed to be immediately after allowance selling price.
Yes. But it's
Do
the
you
figure of
understand?
the closing stock that they put there.
Yes. Is the figure, is because we are giving in the question.
Okay.
They've calculated it for us. Is that clear?
Okay.
Yeah.
So if you add up all these items from 98,550, including it to, if you add it from top to bottom, including the closing stock, you're going to get 562,500 on the invoice price.
Yes.
Is that what you got?
Yes.
Which is also the
So,
same thing as the invoice price on the debit side. That is goods sent to branch.
we've not done the debit side.
We're treating the invoice price only now. We've not done the cost
Okay.
price now.
Okay.
So I think we balance this now. And I
Yes.
said they've given us the closing balance, the closing stock in the question. I
Yeah.
just think about it that what if we're not giving the closing stock? It means we are going to calculate it ourselves. After imputing all these necessary items there, whatever that will remain there is the closing balance of the stock.
Yeah.
Good.
Okay.
Hello, sir.
Yes.
Yeah.
So invariably, are you saying we should bring the closing stock directly beneath the allowance, or we should balance up
Pardon?
and have it as balance carried down?
I didn't get the question. Can you come again?
I said what we are suggesting here is it that allowance selling price directly below it, beneath it, we should put closing stock, or we should allow it the way the text has it, the cost material?
No. We should bring it immediately after the allowance selling price.
Oh, okay. Thank you.
As closing stock. Do we state it as closing stock?
You
or
can call it
balance carried down?
You can call it balance carried down. You can call it stock at end or stock at the so date, stock at close. They know that
inventory.
They know that it represents the same thing. Is that understood?
Yes.
So now we'll now go to the cost price now. On our debit column, the only transaction we've had so far on the debit side under cost price is 375,000, isn't it?
Yes.
It's only 375,000 that we have calculated so far. That is the cost price of the goods sent to branch. So we'll now calculate the credit side also. After calculating the credit side, we were able to get 512 to 700. Is that what you got?
No.
What did you get?
So I'm doing it
I
again.
got
Let me be sure.
418,950.
Eh?
I got 418,950.
Okay, you did not add the cost price of the closing stock.
No, I
did not add.
No, I did not add anything.
Okay, you remember, this is what we're saying. After allowance selling price, we have the closing stock, right?
Yes.
Stock at end or stock at close. That one will also be calculated as 140, 625 times 100 over 150.
Oh,
What
we are
did
going
we
to
get?
calculate it too.
Yes, because it's also a stock element. So that one will be 93,750. So if you add 93, like I said, all these things, you are bringing it to the top. Do you understand? You are bringing it immediately beneath allowance selling price. I hope there is no any confusion at this junction. Somebody is asking, what page is this? What page is that, please?
22.
Okay. Should we proceed?
Yes.
Yes, please.
So we've gotten the total. We've gotten 512,700, right?
Yes.
So if we now compare 512,700 with 375,000, you can see that 512 is higher.
Yes.
512 is higher. So, and if the, what did they call it? If the cost price is higher than the cost price of the items on the credit side is higher, it means you have a profit. That's where you determine your gross profit.
Okay.
You determine your gross profit. So, and if you get the difference between 512,700 and 375,000, you get 137,700.
Yes.
So that is the gross profit. That is the gross profit here. Supposing this same question did not stop here, did not stop at, you can see they just give us some few items here for us to understand the concept, basic concept.
Yes.
Supposing the items they gave us is more than this, they now give us some other expenses like transportation, administrative expenses, salaries, and all that. It means our solution will not stop here. The question will also require us to prepare P&L accounts.
Okay.
In the P&L accounts, if we are using this columnar formats, this T account is going to be, if you're using this T account, it will come to the credit side. We'll now bring this gross profit that we are having in the debit in the memorandum account. We'll take it to the P&L account on the credit. We'll now say gross profit brought down. Gross profit brought forward. Are we there?
We are trying to get it. We are not getting no.
I say, supposing this our question is lengthier than this, that is if it includes other expenses. You know, there are no expenses here.
Yeah.
There are no expenses in this question. If there are expenses included here, maybe transportation, salaries and wages and all that, so it means the question will also require us to prepare profit or loss account.
Okay.
And the question will also said, prepare the necessary books. If the question says prepare the necessary books, you already know that if there are all those elements are there, you are also required to prepare the profit and loss account. So in the profit or loss account, this gross profits that we are having here, 137,700, is what will now, yes, is what will now take it to we'll take to the credit side if we're using T formats of P&L accounts. We take it to credit side as gross profit.
Is it before sales? Before sales or after sales? If you are going to do it on P&L accounts.
P&L, no, in this P&L accounts now, you are not doing any sales here.
Okay.
In the
The
POL,
credit.
you just want to determine whether there is
Net
profit or
profit.
loss. So you brought the gross profit. Then on the debit side, you now list all your expenses direct, except if there is any
Okay.
adjustment. Yes. And
Okay.
then, yes, so that's what you have.
It shows we are not going to use our opening stock, all those things will not be there.
Yes, it will not be there.
Okay.
Mm.
Then how are we going to close it?
You will now close it by establishing whether there is net profit or loss.
Okay.
How do you do that? Your gross profit, if it's higher than the expenses,
You get net.
you get net profit,
Yeah.
which will come immediately under the
After
expenses.
expense.
It will be used to balance it off. But what
Yeah.
if the expenses is higher than the gross profit?
We take the remaining one
It's
to
going to be lost.
gross.
It will
Yeah.
be lost, right? So it
So
will
we
come
take
to
it
the
to
credit
gross.
side
Yes.
of the district. It will go and meet the gross profits there.
Yes. Take to gross and balance it. Yeah.
Yes. So,
But what will not be the heading if if it's a loss? What are we going to call it? You know, the other one is always called net profit. But in
Net
this case, what
loss.
net
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 loss?
profit
loss
Oh,
Net loss.
okay.
at the credit side.
at the credit
Okay.
side. So, and then we are made to understand that this net profit in preparing in the books of the branch is what the head office will carry when head office prepare his own POL account, that is profit or loss account. You know, head office will also have gross profit on the credit side on his own account. It will now bring the net profit from the branch and add it there.
Okay.
Are you there? So, but let's not go into that now so that it will not confuse us.
Okay.
So now we've ended up preparing the memorandum branch stock account.
What
Memorandum,
about these goods sent to branch accounts?
we are going there now. Memorandum
Okay.
branch stock account. So if we look at the goods sent to after this memorandum account,
What number is it showing? 88.
should we proceed?
Yes, so
After preparing the memorandum branch stock account, we are going to prepare goods sent to branch account. Good. See, these are the accounts that are usually prepared when you are preparing this particular account. When you are preparing this branch account. Number one, you prepare the, what do they call it?
Memorandum.
Branch stock account. You prepare branch stock accounts. You prepare goods sent to branch accounts. You prepare profit or loss accounts. You also prepare if there is expenses. Okay, you might not need to prepare expenses one after the other. You prepare a bank account. Prepare branch bank account. So, but that one is only when the branch maintain its own records. But when it is the head office that is sending, that is the other method. They will not need to prepare all these bank accounts. So the one we are going to now is goods sent to branch account. In the goods sent to branch account, you know, we calculated our cost price of the goods sent to branch to be 375 from the memorandum account. And it's on the debit in that account.
Yes.
So the corresponding credit entry will be coming to this goods sent to branch account. That's the double entry. Is that clear?
Yes.
Okay. So good. So goods now, this one, is taking account of goods only. It's taking
Okay.
account of goods only.
Yes.
So, and he said from the goods sent to branch, branch return some of the goods.
Okay.
Branch
Yes.
return some of the goods to head office now.
Yeah.
Yeah.
So that one will now come to the debit. Also at the cost price. So if you will now balance the accounts, those are the only thing that come to inside this account, goods sent to branch accounts.
Okay.
We'll just balance it up. So the balance we'll be having, I think it should always be, what do they call it? The balance carried down should always be debit, so that the brought forward will be credits. So if we balance this at the end of the day, we're having 371,250. So that one is being sent to trading accounts.
So please,
So
can I
now,
ask you a question?
yes, please.
Why didn't we use the goods sent to branch for price, invoice price, that we are using cost price?
Because at this point now, we are no longer preparing memorandum. It is that
Okay.
memorandum is this particular cost price is only applicable to memorandum.
Okay.
In
So
addition to the goods were sent from the head office at cost.
So in this particular one, everything that is coming there is at cost price. Everything. So you can see this one is not 2 columns again. Everything is coming at cost price. And we get our balance, that which is going to the trading account. So we also prepare the, what do they call it? Profit or loss account.
P&L account.
Yes, the P&L account, the balance we are having.
Now P&L account.
Yes. So P or L now, based on the new nomenclature.
P&L. Okay.
So in the profit or loss account, from this our question, we don't have plenty things. Like I said, if we have expenses stated, plenty expenses that are listed there, so this is where we're going to make use of them. So we just bring our gross profit. Yes, we'll bring our gross profit, which is on a debit from the memorandum. It will be transferring to the credit of P or L account. This P or L account is just like an extension of what you have done in the memorandum account. So we have our gross profit, 137,700. So we'll now bring our expenses. We'll deduct our expenses for the period. What are the expenses we have? We have cash stolen. It's an expense to us. It's a charge on the profits of the organization. Cash stolen. You must report it in your P&L account now, Shay. We also have cost of goods stolen. That one too, you are reporting it there. So if there are other expenses, that is how you list all those items there. Then before you arrive at your net profit. But since we don't have other expenses here, so we don't need to, we'll just close our accounts and establish and determine our net profit at the end of the day.
Credit says there.
Where?
At the P&L account. Why is credit not there?
Okay, this is the explanation. This particular account that we have prepared is a situation where the head office maintains the account of the branch. So the branch is not independent.
Okay.
it is dependent on the head office. So he's not preparing his own, what do they call it?
Account.
He's not preparing it, or he's not maintaining its own account as if it's an independent entity.
Okay. Thank you.
So in fact, this particular one is even prepared, is being prepared from the angle of the head office, but on behalf of the branch.
Okay. Thank you, sir.
So with this, we have come to the end. So there is this question, the one I said 2019 question 4.
Please, before you go to another question,
Yes.
I want to ask a question concerning the topic we treated yesterday.
Okay.
Under departmental account. The second question that is in the cost material, they use a capital instead of opening stock. How are we going to treat it?
Which one is that?
You know, we treated one question from the cost material under departmental account.
Okay.
The second question that is in the cost material,
yes.
they wrote capital instead of they didn't put closing stock at the question, inside the question, at the beginning of the question. So how are we going to treat it? What does the capital stand for there?
In that question,
yes,
the closing stock was given under additional information.
Okay.
That capital that you are seeing there,
yes,
is for you in case the question asks you to prepare balance sheet or statement of financial position.
Okay.
That's when you use capital.
Okay.
Yes. We remember those our T format balance sheet now. Capital will be on the debit side of the account. Sorry, on the credit side, there will be assets at the top, fixed asset at the top, current asset at the bottom. Then on the debit side, there will be capital, then current assets, followed by profits. Isn't it?
Liability.
Then current liability at the bottom. That's just a simple, easy way of understanding it. Mr. Solomon. Mr. Solomon. Is Mr. Solomon there?
I can't see him here.
He's
I don't
not
think
there.
he's online.
He was raising his hand just now.
Maybe network.
Maybe network.
Okay. So in this particular question now, question number 4 of 2019 semester 2, let's just read the question quickly. That one, if you go through our course material further, they said there are, what do you call it? Goods sent to branch at a transfer price may be in any of the following formats. You know, what we treated now, they gave us selling price to the branch, isn't it? Sometimes they will now give a transfer price that, okay, if we are sending goods to our branches, these are the, what do they call it? These are the prices we'll be issuing that goods out. So under it, there are three main methods. We have cost method. We have cost method. We have cost plus markup or selling price. So under the cost method, they say the following account to be prepared is branch inventory account, goods sent to branch account, So, we have prepared goods sent to branch account. We know how that one looks like. Branch receivable account, that is account of debtors. Then branch expenses. Then branch, what do they call it? Profit or loss account. This one, I think this one is a mistake. They say pot. It will be P or L. So under the cost price, they say this denotes the actual cost of purchasing or producing the goods, and it is used as a transfer price or sending the goods to a branch in a situation where the branch manager is authorized to determine the price at which the goods are to be sold. So in this particular case, the head office is sending the goods to the branch office at the cost price. So when the goods get to the branch office will now determine the amount they will be selling the goods. They will not put their own profit. The second one is cost price plus markup. So this implies that the transfer price of the goods will be the sum of the cost price of the goods and a certain percentage of the cost price of the goods. So this percentage, which is the profit loading, so they use this terminology, profit loading, is known as the markup. So when goods are charged to the branch at cost plus markup, it serves as a guide to the branch. That is, the branch may sell at any price, provided it is not below the transfer price. For instance, if goods with cost price of 50,000 naira are sent at a transfer price of cost plus 40%, like the one we just treated now. The one we treated is cost plus 50%. Then the branch will sell at a minimum of 70% to the right person. I think this one is also clear.
Yes.
And the third one, the last one, is cost method. So in this cost method, the following accounts shall be maintained. So the following accounts shall be maintained for the branch transaction. One, branch inventory account. So under the branch inventory account, all entries in this account except branch sales are at cost, and the branch gross profit would also be ascertained on the account. So this particular question now, we have a question regards this now. We have example one. This example one was lifted directly the way it is here. In year 2020, this is the one they used in 2019 semester 2.
Oh, wow.
So let me read the question. Well, after reading the
Oluwa
question,
be me and false out. People are disturbing us.
thank you. So I'll just read the question quickly. Then if we have the question paper with us, we can go through it. Then if we don't have, we can go through the material and also digest the question. So then you give me some little time, I'll pray and come back now. Then we'll continue. Then before we jump into partnership, we'll just solve this question and jump to partnership. So example one, they say Gold Standard PLC send goods to its branch office at cost plus markup of 33/1/3. 33/1/3. So the company has its head office in Lagos, Nigeria, and one of its branches in Abuja, Nigeria. The following are details of the Abuja branch transaction for the year ended 30th November 2016. Opening inventory at branch selling price. They are using selling price now. I think we can relate, Abby.
Yes.
We can relate this selling price.
So it means no memorandum.
Yes, it means it is not cost price. It is not cost price. So goods sent to branch at selling price 400,000. Good return to head office by branch at selling price 30,000. Good return to head office by branch customer 10,000. Credit sales 290,000. Credit sales, cash sales 9,700. Authorized allowance of selling price 3,000. You remember we come across something like this from the previous question.
Yeah.
Allowance selling price. Good return to branch by branch customer at selling price. Goods return to branch by branch customer at selling price. So this one is different from good that branch return to office or head office. This one is
returned by customer.
Yes, branch office has already sold some of its goods. So from the customers of the branch office, they now return part of those goods.
So it's going back to branch.
It's going back to branch. So check or cash received from branch customer, 190,000. That is settlement of their money. Cash discount allowed to branch customer, 11,000. Branch bad debts in 10 of whatever, 7,500. Branch sundry expenses paid by head office, 15,000. Cash stolen at branch. Why are they always stealing cash at this branch now? So 10,000. Goods stolen at branch at selling price, 4,000. Closing inventory at branch at selling price, 60,000. So goods invoice to the branch at 8,000 naira on the 19th November was not received by branch until 3rd December and had not been included in the figures. What do we understand by this statement?
Goods in transit.
Goods in transit, it has not reached the branch. So required, prepare the necessary ledger accounts using cost method. You remember we treated, we just explained 3 methods now. Cost method, cost plus margin, and then selling price. So this one we are asked to use cost method. Please, let's go through the question together.
Then we are using the 2 methods. Cost plus markup. Fatty?
I think Mr. Aziz has left, Abby.
Yes.
Hello, good evening, all. Please, have we solved any question already? Have we solved any question today?
Hello there, we just pitted one in the class material.
On branch.
Yes, on branch. Leader.
Okay.
Daddy.
Wow. It no be small thing.
How was your lecture today?
It's not funny. I'm not enjoying this.
What happened?
People are disturbing, you know.
Sorry.
Pushing up. Pushing up. Stop.
Hello. What is happening? Hello. Hello. Hello.
Hi, Pastor Solomon. Hello,
What's happening? Hello, ma'am.
Pastor Solomon.
Yeah, my network is so bad. I don't
And
know.
went to pray.
What about Aziz?
He went to pray. He went to pray.
That's good. For the
You can take over if you wish.
my network is bad.
No,
That's why I'm so.
for him to come up.
And the man finish this one thing.
This one that is less is money. You know, I won't bring it now.
Hello. Hello.
Thank you. Well, welcome back. Mr. Solomon, yes, can we hear you?
Aziz, why are you delaying us to like this now?
Sorry, sir.
It's not good now.
You said?
It's not good now. Why are you delaying us now? Everybody has his work or anything that is doing now.
No, I took permission. I went to pray.
I had to, they pray now.
So that's why I was suggesting 4 to 6 before.
But tell them the time. They will think it's another thing now. You know our people now.
No, they are aware. That's how we did yesterday. So can we proceed?
Yeah. Thank you. But there's some people are complaining, but because no, saying that say they are not getting the markup this thing very well. But maybe when we do the other one,
no, it's just now.
Yes,
so they will get. They'll get it. Thank
and
you.
that's the major thing. Branch accounts. Thank you so much. God will help you.
No problem. No problem. Thank you. So can we proceed?
Yes.
Can we proceed, everybody?
Yes, so.
It's like you're the only one online.
Starting now.
Other people, they've gone to the kitchen.
We can proceed.
How did you know?
It's a normal thing.
Okay, no problem.
Honestly,
Provided it will not disturb the class.
Honestly,
and my method and this thing, it's not good.
So shall we proceed?
Yes, sir.
All right, good.
Go ahead.
I want to reiterate this again. The calculation is better you use what you understand better. Are you there?
Yes.
It's better you use what you understand than the one you will not understand.
Okay.
We use the calculation we're using. We use 100 over 150 the other time.
Yes.
Instead of
2 over 3.
Instead of 2 over 3, which we said is also the same thing, Abby.
Yes.
It's the same thing. So I want to be sure that we are much in the class now, so that we will not come and call us back again. Shall we proceed?
Yeah, 13. I hope they will not take us back.
But are they active? That's just it.
That's it. Because please, if you are in the class, unmute your mic. Let's see.
I'm here.
If you are in the class, please unmute your class, your mic. If you are in the class, unmute your mic. Okay, I think we have 1, 2, 3, 4, 5, 6, 7, 8. We have just 8 people.
People have left.
Until now, they will join now.
All right. Let's start. In this particular question of on example 1, we have gold standard PLC. Like I said, this particular question was lifted directly from here.
Please mute everybody back. They started with their noise again. Please, everybody, let's.
So in this particular one, gold standard, I said they lifted this question directly, and that's what they use as question 4 in the year 2019 semester 2 directly. There is no change at all. So we're also treating it too. But the only difference is that in this question, we are expected to use cost method and also cost plus markup method in this particular question. But in the question that they asked in the exams, they only requested cost method alone. Then I also want to tell us that when we are treating this particular question using the cost method, from our material, they say if we're using cost method, the account to be prepared are branch inventory accounts. Are we seeing them? Branch inventory account, goods sent to branch account, branch receivable account for credit sales, and then branch expenses and also branch P&L account. So in this part, we are starting with the branch inventory account. But before we start, let's establish our cost price, or the basis of apportionment of the cost price, calculating the cost price. We have gold standard PLC. And they said it send goods to its branch at cost plus markup of 33/1/3. 33/1/3 is the same thing as 33.33. 1/3, if you press your computer, what did you get? Somebody should help us do that. Are we there?
Yes.
1/3 is what?
0.33.
0.33, good. So 33/1/3 will now be
please, how did you calculate it, please?
1 divided by 3 is what?
0.33.
Yes. So if you add 0.33 to 33, what do you get?
Okay, we are going to add it.
Yes, now 33/1/3 is the same thing as 33 and 33.33 that you just calculated.
Okay, so I got 33.33.
Yes, that's good. So they now say that's the markup. That's the
Please,
markup.
is it 33.33? That's the answer, or 0.33?
They say the markup is 33/1/3.
Yes.
And we know 33 now. 33%, we know 33%, right?
Yes, yes.
But 1/3% is what? We now say you should use your calculator to divide 1/3.
That's 0.33.
Yes, if you have 0.33 with the 33 you already established is what? 33.33.
That's 33.33.
Good. That is our markup.
Okay, thank you.
You're welcome. So if 33.33 is our markup, it means what did they call it? The selling price is 100%. Are we there?
Go on, continue.
Yes.
Yes.
Selling price is 100%.
Plus.
It's 100%.
That's 3.33.
Okay, sorry. I say selling price is going to be 100% plus 33.33, isn't it? Yes, we are on track. So if selling price is 33.3,
bring it back.
If selling price is 100 plus 33.33, which is 133.33, then cost price will now be what? Cost price will now be
1/3.
No, cost price will be
100 divided by 133.
It will be 133, 133.33. Okay, yes, you are right. I want to establish, okay. Cost price is 133.33 minus
-1, I think, right?
No, minus markup, which is the profit.
Cost price is 100% now.
Cost price is 100%, which is
Markup 133.
markup is
200
33.
divided by 133.
No, this is it. Let's get it like the way we did the other. You remember what we did the other time? We get our selling price.
Yes, maybe we did the other time.
We
Yes.
also get our cost price. We also get our profit. Our cost price is 133.33 minus 33, which is 100%, isn't it? Our profit, which is also the same thing as markup, is now 133.33 minus 100 will give us what? 33.33. Yes. So if we want to determine our cost price now for each of these items, like the way we did, and that is what we're going to use throughout the calculation. It will be what? Somebody is saying something.
By 133.
Correct. 100 divided by 133.33.
Yes.
0.33.
100 divided by 133.33.
Times the selling price.
Times the selling price. So I want us to just get the basis only without using figures now. 100 divided by 133.33. Use your calculator. What did you get?
Oh, shoot, hot water.
0.75.
Correct. 0.75. You can see something. If you look at the material, you will see the basis they are using inside the material there. Can we see that? Yes. They use 3/4. 3/4 is the same thing as 0.75. Is that correct?
Yes.
Well, get 3 divided by 4. What did you get?
0.75.
You can see that we are getting the same thing.
Yes.
We are getting the same thing, right?
Yes.
If you want to use the cost if you want to use the cost material to determine this percentage, it will give you difficulty. In fact, you might not arrive at this 3/4. You just end up getting confused. So, but this our method, I think, is the best. Is the best. It will still give you the same thing. So now, yes, everything. Mrs. Rukayat.
Hello, everybody. The noise is much. I'm not getting it.
All right.
Please,
thank you.
I have a question.
Okay, go ahead, please.
Okay, the question is, please, I will be offended. How we converted this 33.1/3 to 33.33? I'm still trying to get it on my calculator. I'm not getting it at all because I got 0.66.
All right, this is what we do.
Okay.
We said the markup as given to us from the question is 33.33. 33 points. 33 1 over 3. Is that correct?
Yes.
33 1 over 3%. Is that correct?
Yes.
But 1 over 3 is not expressed in percentage, it's expressed in fraction. So we need to convert that fraction to percentage. And we said the 33 is already converted to percentage already. So what is remaining now is 1 over 3 that is yet to be converted.
Yes.
So how do we convert from fraction to percentage now? We now said you should do 1 divided by 3 that you have there. Press it on your phone now and give us the result, please.
0.33.
0.33.
Yes.
When you add the 0.33 to 33 that you have earlier, what do you now get?
Okay, plus 33. That will be 33.33. Sorry, I also converted the 33 initially.
Okay. Okay. So now I think we are good to go now.
Yes.
Hello, sir.
Good. So we've already gotten the 33.33. I think I'll also snap what I have. I'll snap what I have from my end here so that we can be on the same page for reference purpose.
Please, please, I have your question.
Go ahead, please.
I don't know how you got, you mentioned one point, I'll be 133 all over. I don't understand. Because I know we got 33.33, but you mentioned 133.33. How did you get that? And when do we use that figure?
Okay.
Hello, do you understand my question?
I didn't get your question. Can you come
Hello,
again?
sir.
Yes. Hello.
Can I help us out from here so that we don't waste the whole day? Please,
you said?
I want to make an input. I want to make an input. Hope it will be helpful.
Go ahead, please.
Okay, please, for all those who are a bit confused about how we got the fraction into decimal, when you have 33 1/3, if you can convert it to improper fraction, then you can easily divide, right? Using your calculator. Like that 33 1/3 is 100 all over 33, right? Just do your calculator, 100 divide 33. That will help us pick up so that we don't keep wasting the whole time. Divide 3, sorry. That will help us to get 33.3 at once, at a go.
I've also shared how we did the calculation on it. I've shared it on the screen now. Are we seeing it? Can we see it?
Let them not be carried by that 1/3. It's just that the whole percentage is 33 1/3, and that is whole number and fraction. We just want to take it to decimal. So we just take it to be 100, and 33 1/3 is 100 all over 3. 100 divide 3 is simple for everybody, isn't it?
It is. Does my sister Jare. Thank you very much.
Thank
that
you.
lady asking, I think it helps, Abby.
Yes, I got it. Thank you so much.
All right, thank you so much. So I think I've already shared that on the screen. So let's proceed, please. Let me share our course material again. I hope this my method that I'm using is okay, but this conversion, so that we will not get confused along the line. It is. All right. So in this particular one now, we have we already determined that we're going to, when we are using cost method to prepare our branch account, we'll be preparing like 5 items based on what is given, what is required in this particular one. So one of the items we're going to prepare is branch inventory account, goods sent to branch accounts, branch receivable account, if there is any credit sales, then branch P&L accounts, branch expense account, and branch P&L accounts. So let's proceed. We're starting with the first one now. From our question, we're given that we have opening inventory. We want to start with branch inventory accounts. So assume that in that inventory account, there is nothing inside, Abby. Are we together?
Yes.
Yes.
Good. There is nothing inside. So we are picking from our question directly and we'll be filling it. So if you have paper and you are very fast in copying, you can be writing it so that you get the concept completely. So the first item that will be coming into this account, this inventory account, is opening inventory at branch selling price. Opening inventory at branch selling price is 40,000 naira. So this time around, we're not using memorandum accounts because the question did not require request us to use to prepare memorandum accounts. Instead, we're starting with branch inventory accounts. So the first item is, instead of that 40,000, we're going to convert it to cost. We're going to convert it to cost because it is given as selling price. How do we convert it to cost? By multiplying that 40,000 times 100 over 33 over 133.33 or 0.75. The two will still give you the same result. Are we there?
Yes.
Please repeat what you have just said.
The balance brought forward, which is the first item in the question, opening inventory at branch selling price. Branch selling price is 40,000 naira. And we are expected to recognize it at cost price. And the cost price, we've already established the basis of getting our cost price, which is either 100 over 133.33 times the amount or 0.75 times the amount. Is it clear?
Yes.
Yes, thank you.
So that is what we'll now use. So the first item is 40,000 opening stock, opening inventory. Opening inventory, if you multiply that 40,000 times 100 over 133.33, it will give you 30,000. I just shared the basis we are using on our chat box. If you check the chat box now inside this Zoom meeting, you are going to see it. So the next item, we've already treated this opening stock. Then the next item, goods sent to branch at selling price, 400,000. Goods sent to branch. And we've already said that goods sent to branch will always be on the debit side of that particular branch account. Goods sent to branch is 400,000. When you multiply 400,000 by that, our normal percentage, what do you get?
300,000.
300,000, good. So that is how we arrive at our 300,000. The next item Good returned to head office by branch at selling price. Please give me 1 minute to discharge these people. Please take care of these people now so that I'll concentrate. Sorry. You people are hearing my voice, so they are coming to distract.
No problem. It's allowed.
So the good sent to branch, good return to head office is good return to end office by the branch at selling price is 30,000. So in our material, you see that first item on the credit side, you see the road good sent to branch, Abby?
Yes.
Yes.
It's not correct. It's supposed to be good return to head office.
Okay.
Do we get it?
Yes.
So good return to head office is 30,000. So when we multiply it by our usual percentage, we get, what do we get?
22,500.
Please, I want us to be using calculator in case there is a, what do you call it, typo error.
22,500.
We're using, I'm calculating it.
That's the only way, because if you
I'm
follow this,
calculating ahead.
you get it to confuse us more. So the next one is a good return to head office by branch customer.
Okay.
Yes. So good return to head office by branch customer. Branch customer return some goods to head office. Ordinarily, we're supposed to have receivable, isn't it?
Yes.
Hello.
Like the head office received it.
We're supposed to have receivable. I'm coming on, sorry, please. It will give us
7,500.
So that 7,500 is
Can you
not
take that again?
see good return to head office by branch customer. The branch has already sold some goods to his customers.
Okay.
So this time around, and this particular inventory account supposed to capture what do they call it? Supposed to capture the element of goods received and the goods sold. Good received from headquarters, from head office, and anything that is capable of reducing the goods received from the head office. But this time around, the customer returned to head office.
Okay.
He did not return to this branch. So it's not supposed to come under this inventory account, the branch inventory. I don't know if we get it.
Hello, sir.
Okay.
Hello, yeah.
It says goods returned to head office by branch customer, right?
Yes, not branch office now, branch customer.
Okay, that means the customer sent it directly to the head office, not back to the
Yes.
branch where he bought
Mm.
it, and then branch returning it to head.
Head office. Yes.
So it's a direct return.
Yes, it's a direct
Is that
return
what
to
we're
the head
saying?
office.
Because I'm
It's a
looking at
direct
it as
return.
something that branch received back from the customer, and then later would have to return it to the head office. I stand to be corrected, please. Thank you.
No, the branch did not receive it.
Okay, thank you.
Mm. The branch did not receive it at all. So it's not coming into their inventory, although it will have effect on their transaction at the end of the day, but it will not come into their inventory account.
Okay. I know it will have effect. That's why I asked this question. Anyway, let's move on.
Mm. So let's KIV this 10,000, this particular transaction. Let's KIV it. Let's keep it in view. We also have credit sales, 290,000.
Hello.
Hello? Mrs. Rukayat, go ahead, please. Mrs. Rukayat.
So please, should we note it down? Should we include it on the credit side or ignore it for now?
Ignore it for now. Are you there?
Continue. Our network is bad.
All right, maybe when she comes back. Credit sales, 290,000. So our credits, our sales.
Thank God.
Okay, our sales are usually represented in the amount, whether cash or credit sales. If you go back to the previous one we solved, the cash sales was represented at the same amount, both on invoice and the cost price.
Yes.
Okay.
Credit sales was also represented the same amount, both on invoice price and the cost price. Have you gotten that?
Yes.
So our credit sales is 290,000. So it's also represented here as 290,000. So we are not converting that to cost price.
Okay.
The same thing with
applicable to the cash sales.
The same thing is applicable to cash sales. Cash sales is it 97,000 or 9,700?
9,700.
It's written. The 7,000 is written now.
Hello, just make a correction. It's 97,000.
It's like, so let's correct it from the question.
Yeah.
Let's add 10 to the question, 97,000. Then we're also told that authorized allowance of selling price is 3,000. Authorized allowance of selling price is 3,000. So this particular authorized allowance okay, this one is not coming into inventory account. Hello?
Okay.
Why?
Are we there? This authorized allowance of selling price is not coming into inventory account. And even its memorandum account, it will come there.
Can you explain why?
Yeah, because this particular one is just like giving some person some discounts from what ordinarily what they ought to have paid, and it's reducing from the amount of money we're supposed to receive from them. So we are now recognizing that you have already received the money.
Okay.
We also have good return to branch by branch customers at selling price. Good return to branch by branch customer at selling price. Now, the customer of the branch.
Please mute this person, I beg. Oh.
The customer has received, good has been sold to customers before. The customers are owing us, but they decided to return some of these goods. This time around, they return it to the branch itself.
Please let it be bold.
You can zoom it on your phone too. Or
Well, you can zoom it on your phone so that some information will not be missing there. You can zoom it. So authorize, what do they call it now? Good return to branch by customers at selling price. So it's coming, we are treating inventory accounts now. And the inventory account, we've already sell some goods to customers. So they are returning those goods to us in the branch. So the good is coming to the debit side of the account again. And that good that is coming, are we going to convert that particular one into the normal selling price, cost price?
No, because cash has been received.
Because now we are not dealing with headquarters now. We're not dealing with head office. We're dealing with outside customers now. That's the reason why we're taking this as 15,000. We also have cash received from branch customers. So that one too will not come into the inventory account. Cash discount allowed to branch customers, 11,000. It will not come to inventory account. Branch bad debt written off is 7,500. That one too is not coming there because it is not inventory inclined. So inventory is capturing only those items that has to do with inventory. We also have branch sundry expenses paid by head office, 15,000. Will it come there? It will not, because it's not good. Cash stolen at branch, 10,000. Will it come?
Yes.
Yes, because it's what amount of goods that they stole. Then goods stolen at the branch at selling price, 4,000. So goods stolen from the branch too is 4,000. So that one, we're going to convert it to the cost price. That is our usual 100 over 133.33 times 4,000 to give us 3,000. Then closing inventory at branch at selling price. So this closing inventory, they gave us closing inventory the other time. They're also giving us now. So this closing inventory is 60,000. So we also calculate that element of those goods at cost price. Then goods invoice to the branch at 8,000. Invoice to the branch from the head office to the branch at 8,000 on November 19th was not received by the branch until 3rd December. And we are preparing this account as at 30th November. 30th November. So it means the good was still in transit. So there is no how the branch can account for these goods because it's not in their custody. So they have to treat it as if is a charge on what they have in the store there. I don't know if you get it. Do you understand this one? I'm hearing silence all over.
Personally, I don't know. I don't know for others.
It's not clear.
Please, can you explain it again, please?
At branch 8,000 was not received by
They
branch.
said in good invoice.
Oh, like, okay, yeah.
Like now, 400, let's say 400 quantity of commodity. was sent
Okay.
from head office to branch office. They have captured it in their book that we receive 400. But out of those 400, there is a particular 10 that is yet to reach the branch office as at the date you are closing this particular account. Will it have effect in your account?
No,
Yes.
but it has not gotten to the branch.
No,
Has it gotten?
it will have effect because you must have already captured 400 as received. Meanwhile, it's not the total 400, it's 390 that you received. I don't know if the concept is clear. 400 minus 10.
390.
390. But the 400, the way this account is being prepared, probably they have way bill or so that they normally use to enter it into their records. And the way bill is carrying all the ones they've been sending, maybe they're sending it instrumentally, maybe 100, 50, 50, and they've already captured up to 400. But in the real sense, is the 390 that came to them, 10, the remaining 10 is yet to reach the branch office as at the date of preparation of this account. So it means they have to deduct it. And that is the reason why it's coming into our branch inventory account. Meanwhile, we have to convert it to cost price. I hope it's clearer now. Is it clear now?
No, sir. By me, it's not.
Okay.
I don't know for others. Please just go all over again. Thank you.
In our question, how many quantity of goods was sent to branch?
400,000.
400,000.
400,000 was sent. But in the real sense, branch is yet to receive all the 400,000. It has received everything except this remaining 8,000 that did not get into the branch until a date after the closing of this account.
Okay.
So it will not be captured part of what was received. But meanwhile, our record has already captured it.
Okay.
The branch inventory has already captured the 400. So we have to find a way of removing the one that is yet to reach the branch. So, and that is the reason why we are bringing it to the credit side, because we say credit side is anything that is capable of reducing from the stock that we received.
Okay, yeah.
It's clearer now, right?
Yes, sir. Thank you.
So we are not adjusting it. It's just that same amount that we now put at the credit side.
No, we're adjusting. We're adjusting. Because the 400 that we claim we received, we also adjusted it.
Yeah.
So the one that is still in transit will also be adjusted.
Okay.
So it has to be adjusted. So that is for this particular account now. So the only thing we have not captured into this inventory account, the only thing we've not captured is what do they call it? Branch receivable something. This 2.5, but we'll come to that. So we are finished preparing our branch inventory account, isn't it? Hello.
Hello, yes.
Hello? Yes. So
Hello.
the next one, we're going to goods sent to branch. Goods sent to branch. You know, that one is always a simple one. We'll
Should
look
we
at,
close it?
and we're going to close it. There is a
You know, we've not
particular.
included cash stolen of 10,000.
Don't close it yet. You said?
We've not included cash stolen.
No, we included it, 10,000, cash stolen. There is cash stolen of 10,000.
It's already there. It's there.
There is cash stolen there of 10,000. Are we there? We included cash stolen. This sister that's asking this question. There is cash stolen of 10,000. There is cash stolen of 10,000, and then there is a goods stolen of 4,000. All of them have been taken care of. That's when we said cash stolen, because it is the cash element, it will not be adjusted. But the good stolen, since it is good in nature, that one is going to be adjusted. So don't close the branch inventory account yet. Just leave one space, two space, leave two space, and then let's prepare the other one. You know, this is how they do this thing. If you go ahead to just close this, you might not get it right, because a component of that particular inventory account, you work it from another account to bring it here. Is that correct? Hello?
Hello.
Yes. Do you understand this statement?
Yes.
There is one item inside the branch inventory account that I want us to work. We'll now come and put it here. We cannot work it direct from here now until we open that particular account. It is from that account we'll now bring it here. So the next account we are opening is goods sent to branch accounts. Goods sent to branch accounts is always the amount of goods that the head office sent to the branch. And we agree that the amount of goods head office sent to branch is 400. So that will also be captured at cost price, which is 100 over 133.33 times 400, which will give us 300,000. That is goods sent to branch. And then we also agree that branch returned good that worth 30,000 to the head office. Is that correct?
Yes.
So when we convert that to cost price, it will give us 22,500, just the opposite of what we have in the inventory accounts. So we also have a amount. There is a certain amount of goods. There is one particular item that I say we should KIV the other time. From the question, the fourth item there. Are you seeing the fourth item?
It's return to head office.
Goods that the customer returned to head office. So the customer, the customer has returned a particular some amount of goods to head office. Branch office sold the goods to customer. It is the branch office that sent the goods to customer, but the customer, instead of returning it to the branch, they return it to head office. So this is a goods sent to branch. We are assuming this is the branch head office account. This goods sent to branch is representing headquarters part of the deal. The credit side shows that they are giving out goods that are worth 400,000, and when converted, it becomes 300,000. And it's also showing that they have received goods that worth 30,000 when converted become 22,500 based on the cost price. So the headquarters, the head office also receive amount of good that worth 10,000. But this time around, for the fact that they are converting everything to cost price, they have to work it back to 7.5. So, but this 7.5, it will not be complete because what the customer returned to the head office worth 10,000. So it means there is a margin of 2,500 that remain from what headquarters received. So who is going to bear it? Who is going to bear the particular margin? Of course, it's a branch. So that's why it's now been added to what branch has received as 2.5. That's why I say we should not close this one the other time, so that we can get it. This 2.5 that we are having on the debit side of the inventory account is the completion, is a component of the 10,000 that the customer returned to the head office.
Profit elements.
Yes. Is this statement clear now?
No.
Customer bought good. Customer bought good from branch at 10,000.
One of our names.
You said? What did you say?
I said you should make use of some of the names as example.
Olajumoke, Abi, Saddam. Saddam is the head office. And Josephine is the branch office. Branch office, Josephine sold goods to Rukayat. So when he sold goods to Rukayat at 10,000, what does that mean? It means Josephine has made profit of 2,500 from that 10,000. Is that correct?
Yeah. Yes.
So now, as Rukayat want to return the goods, instead of Rukayat to return the goods to Josephine, he now went to return the goods to Saddam, because you know that Saddam is the head office. Maybe probably the head office is even closer to it. So he now decided to. So now head office accepted that goods because you know that okay, it's still within the same branch. It's still the same business. They decided to accept the goods from them. What does that mean? It means that the profit Josephine has made, profit of 2,500 that Josephine has made, is void now. Is that correct? Is that understood?
Yes.
So it means we have to collect that profit that.
No, I did not understand. Sorry, Mr. Abdulaziz.
Even the problem came from, please, this branch inventory of 2005. How did we get that?
That is what we're explaining now.
Listen to his explanation.
So are we using 0.75 to multiply 10,000? That's where we should.
Oh, God. Let him finish the
explanation. That's where we are.
Okay. Let me use ABC. A is the head office. B is the branch office. C is the customer.
Okay.
B, who is the branch office, has sold good that worth 10,000 naira to C, who is a customer.
Okay.
From our understanding, it means if we
multiply that by 0.75, it will be 750. That is the cost price of that good. Is that correct?
Okay.
So that means B has made profit of 2,500 from that transaction. So ordinarily, that profit will have gone scot-free, no problem, no wala. But in the process, C now returned that goods. Are they being the C returned the good to B, who is the branch? How are we going to treat it? I want somebody to respond.
B can return the goods by itself to the head office.
No, don't go to head office first. Maybe is
Okay.
B, the B who is the branch that sold good to C,
Okay.
who is the customer.
Okay.
And the good, the selling price is 10,000. That is, there is a selling a cost price of 0.75. So if C, who is a customer, return the good to original seller, who is a branch, how are we going to treat it on the inventory account? Network.
If it's
Who wants to make attempt?
NDB.
Who want to make attempt?
Hello, I think in this situation.
Hello.
Who want to make attempt?
Hello. Hello.
Hello.
I think in this situation, in this transaction, we debit customer and credit branch.
No. No, sir.
Okay.
Another attempt, please.
Please, can you repeat the question again?
B. A is the head office. B is a branch office. C is the customer. B, who is the branch, sold good that worth 10,000 naira to customer C. And we are told that the cost of that good is 0.75 of that amount, which is 7,500 naira, isn't it? So now, we're now told that C, who is a customer, returned that good that worth 10,000 naira back to B, who is a branch office. I'm citing this one as an example. If he returned that good that worth 10,000 naira, how is B going to record it in his own inventory account? That's the question.
That's like it's like a returning word now. So
returning word, yes.
It's going to be on the debit side of the branch account.
Branch inventory, correct.
Branch inventory account.
I love that response. But what amount is B going to recognize it? Because he has sold it at a profit before.
And he's returning everything.
It will be 7.5, Abby. It will be 7.5, Abby.
Yes.
Okay, but ordinarily, had it been it is a head office that returned that thing, it will be 0.75. But customer is returning it at the whole amount because we have sold it to them at 10,000. So when we are receiving it from them, we also receive it from them at 10,000. Because the second leg of that transaction is going to be cash. I sold good to you at 10,000. I received cash of 10,000 from you. I've already made my profit. I did not even tell you the amount of profit I made from it. If you return that same amount of good to me, how much am I going to give you? I'm going to return your 10,000 flat.
Yes.
But, yes. But now, instead of C, who is a customer, to return it to B, and B will have recognized the 10,000 in his account. C now went to return it to the head office A. We've seen another turn to it, but
Yes.
so, and B already recognized profit of 2.5 from it in his own 10,000 that I received before. When they return the goods to head office, had it been they return the goods to B, which is the branch, the B will have recognized it as 10,000 now, Shebi. But this time around, it's head office that is collecting it. Will head office recognize it at 10,000?
No, they recognize that the amount they are
The cost price.
Yeah, they recognize it at the cost price.
Yes.
Which is what? 7.5. The cost price is 7,500.
Yes.
Is that correct?
Yes.
So that is why we are having 7,500 on the debit side of goods sent to branch. So if headquarters is receiving it as 7,500, who is going to bear the consequence of the profit that was made initially on it?
It's a branch now.
The branch. Yes. So it is the consequence of that profit made on it earlier, that is 2.5 that you are receiving on the receive side, the debit side of the inventory accounts. Is it clear now?
Okay.
I hope there's no confusion to this again. Can we proceed?
Yes.
So we can close our inventory account. We can close our goods sent to branch account. We can close inventory account. We can close goods sent to branch account. The next one is branch profit or loss. Okay, no, we're going to branch receivable account. In the branch receivable account, this account represents the customer account. Who is the customer in this case? The person the branch is selling to. And we're told from our inventory that branch sold good that worth how much? 290,000 to the customer. That's why we have debit. So it means receivable is receiving, that is customer. They're receiving good that worth 290,000. Out of the goods that worth 290,000, goods sent to branch, we're told at a point, there is a particular amount that we KIV the other time. 10,000, which 7,500 went to goods sent to branch account. So the second leg of it will be coming to the receivable account. It means the customer received good that worth 290, he returned good that worth 10,000 to the head office. Out of the 10,000, head office bear 7,500 because they received the goods. Branch office bears 2,500 because they have made profit on it before initially. Then we're also told that the branch received good that worth 15,000. Goods returned to branch by branch customer at selling price, 15,000. So 15,000 is also coming in here. So it's reducing the indebtedness of the customer. All these things you are seeing. We were told that check cash received from branch customer, 190,000 from the question. It will also come to the credit side of the customer's ledger, 190,000. We also have discount allowed, 11,000. 11,000 will also reduce from the indebtedness of the customer. We also have bad debts of 7,000 branch bad debt in 10 of or so. I don't know the meaning of that, but we shall know is this bad debt is 7,500. So we'll now close the customer's account with that. Are we together?
Yes.
Mm-hmm. Then the next item, which is the last one, is profit or loss account. Just like we did from the initial question, that we explained that when you have brought gross profits from your either memorandum account or inventory account, they brought a gross profit will be brought to your profit or loss account on the credit side. That is an income to the P&L account. So on the debit side, that is where we will now charge all our expenses for the period. We can pick the expenses one by one. We'll pick all the ones that are related to inventory. We'll pick the ones that are not related to inventory or the memorandum accounts. We'll pick all of them and put them on the debit side here. So with that, we'll now determine our gross profit or net profit. And from what we have had from the question, we have discount allowed, 11,000. We have bad debt, 7,500. Sundry expenses, 15,000. It's also in the question. All these things are picked direct from the question, no calculation. Branch inventory, cash stolen is 10,000. Somebody is asking now what page is it? Can somebody, I don't know the page, can somebody reply? What page are we?
Page 132. 132 soft copy. Page 132 soft copy.
Okay, 132. I just send it.
Oh,
page 132. All right. So we also have cash stolen of 10,000. We also capture that. We also have goods stolen. The goods stolen which we have already converted. So that one, instead of goods stolen, is 4,000. So from our material, under the P&L account, goods stolen is going to be 3/4 times 4,000, not 40,000. We can eliminate 1 0 there. Then net profit will now be 79,500 if we are actually calculating it. With this, we have solved this question. Hello.
I didn't see, excuse me, I didn't see goods stolen. I only saw cash stolen.
Cash stolen. Okay, you didn't see it from where?
I didn't see goods stolen.
Is it in the question or in the solution?
But you just said it in the, so I thought it's in solution. Is it in the solution? I did see it in the solution.
Yes, you know, we are treating the branch statement of profit or loss.
Okay.
In the profit or loss, there is a goods stolen now. Even from our question, there is goods stolen at branch at selling price of 4,000. And when you convert it to cost price, it becomes 3,000. So in essence, all these things you are seeing, they are corresponding entries of this particular one we have in the, what do they call it? In the inventory account. Those items that are credit on the inventory account, some of them are coming to debit in the POL account. Are we there?
Yes.
So we are done with this question.
Oh, this is not easy at all.
You said?
I said it's not easy.
No, it's because we're just explaining it. But by the time you go through it and you're writing it, I think there was a lady that was writing it.
I'm even writing as well.
So if you write it, you will understand it better.
Can we go to partnership that you said the other time?
Okay. But you still give me some little time. I'll still eh? Can you give me like can you give me like 20 minutes again? So maybe you can just discuss some other things.
No problem.
Okay,
it's fine.
Like 20 minutes. Sorry about that, please. Tiwalola is trying to say something.
Yes, good evening, everybody. Good evening. I just joined. Yes, please. Good evening, everyone. I just joined now. I was the one who asked about the page, and I was told page 132, and I'll be trying to locate that question. I don't know. Maybe I'm mistaking the course material. Please, are we treating production management or management accounting, please?
No, this one is financial accounting.
Okay, no wonder. Okay, thank you.
All right.
Thank you.
Yeah.
Please, is the class going on? Hello? Has the class started?
No. Okay, okay. All right. Hello, everyone. Are we? Hello?
Hello.
Hello?
Hi.
Are we still online?
Yes.
Please, if you're online, you can unmute yourself. Let's see if we can discuss some little things about partnership before the other class commenced. Please unmute yourself if you're online. Let's know if there are people online. You can proceed.
People are online. People are online. We are at 11.
We are online. Oh, we have been waiting. Oh, we are online.
All right, no problem. So let's look into partnership briefly.
Hello. Yes. I'm trying to share the.
Okay,
Trying to share the
before I was
okay.
okay. Before it was not clear. I couldn't hear anything.
Okay.
Oh, good.
So let's discuss partnership. Partnership is on what page, sir, of our material?
I got the one printed without pagination, no numbering, so I really cannot even tell.
Okay.
Yeah,
Because
sorry about this.
I want to open it on another device so that I'll be able to.
Oh,
okay.
46.
Okay, 46 partnership.
Thank you.
So let's quickly see what we can achieve from partnership now before the other class commenced. So I don't know. Some persons complain that they could not comprehend this particular one very well. But if there is still not enough time, we can still look into it maybe some other time. But for now, let's go into partnership. In partnership is a business of what do they call it? A business of two or more persons that come into partnership and form the business. And they say partnership have maximum number of, is it 20?
20, yeah.
20. Yeah, 20. And then from 2 persons and above, 20. So there are some dynamics around partnership. It's the same partnership that we know, but there are some key things we just need to focus our attentions on. These are the theoretical parts. The theoretical parts are there. But the one that, okay, let's look at this quickly. We have partners capital account. We have partners capital account. When they say partners capital account, it's like a ledger account that is prepared for each of the partners. Like if we are, the way we are the account we just finished discussing now, you know, we're preparing customers. There is a particular account we prepare. We said branch receivable account. You know, we say that account belongs to the customers. So, but this particular one now, it belongs to partners. Each of the partners, when you are preparing it, you prepare it as if it's the partner that is keeping that particular record. That's capital account. We have fixed capital account. So this is the partnership agreement, is that the amount of capital introduced by each partner shall remain fixed and all that. Then floating capital. So all these ones are different type of capital account. We also have current account. The current account record all the transactions that takes place between the partners and the partnership. So that is in between the partner and partnership. So like Mr. Saddam is one of the partners. Engineer Kelechi is another partner, but the partnership itself in its own name. So Mrs. Kelechi will now keep a, what do they call, a current account that will show the transaction between Mrs. Kelechi and the partnership. Then we also have appropriation account. This is used to appropriate the net profits for the year calculated from the statement of profit or loss. So if partnership is doing its business and at the end of the day, they make some profits, they will first calculate the business. They will look at the business as a whole. And then after the establishing the profits, after deducting all the expenses and all that takes place. So it is this appropriation account that they will now use to distribute the profits to the various partners based on the ratio of sharing. So sometimes they share equally, sometimes they share based on some agreed percentages, depending on their participation in the partnership. We also have interest on loan. Somebody that grants loan, you might be up to 10,
So 2 of you or 3 of you or 5 of you might grant loan to that partnership. Like you are giving the partnership loan. So the partnership will not say because you are a member, they will not give you your interest. They will give you interest for providing such loans. So it will be part of the things you'll be benefiting from the partnership. So we have partner salary. So partner salary is for those people that participated. They are partners. They are partners, and they also participated in the partnership business. So that's the partners' salaries. So we also have I think that's all. Those are the things we need to discuss for now. So let's look at let's look at one question ahead. In the appropriation account, you look at on this page, in example 2. In example 2, are we together?
Yes, sir.
Okay, good. In example 2, they said Shegun Ade Ojo have capitals of 8,000, 600, and 4,000 respectively. On which they entitled to interest at 5%. Show how the interest on capital will be dealt with in the partner's account. The profit for the year before charging interest in capital amounted to 2,000. So the 5%, if we charge 5% on 8,000, what do we get? We get 400. We get 400 when we charge 5% on 8,000.
Yes.
It's 400. So now, the second one, I think that 600 should be 6,000, Abi. It should be 6,000.
Yes.
It should be 6,000. So if you charge 5% of the 6,000, you get
300.
300. So they are just giving us illustration how they charge some of these things. Like this is how it happens. We are all partners. Ideally, all of us are not participating. We only provided our capital for the business to run. So we will not be entitled to anything apart from this appropriation of the net profit. But if one of us provide capital, that one person provided, what do you call it? All of us must have provided capital. So we'll charge, we'll get a percentage on our capital. If one of us participated in the running of the business, that person will be entitled to the salaries, and then like that. So I think this particular part is understood. So they don't say drawings, interest on drawings. We know drawings in accounts now. When somebody
drawings are money withdrew from owner's account for his own personal use.
Yes.
Is he alone?
So when they say interest in drawings, if the partner happens to take money from the business, like to take loan, so he'll pay a certain interest.
It's a loan, Abi. It's a loan, like a loan. Okay.
Yeah, it is like a loan.
But you don't call it loan, I think, right?
Yes, the reason why they call it drawings that they don't call it loan. You are taking from taking from your money.
Capital, exactly.
You are taking
Your own
from your
capital.
money, but with the intent to return the money back.
Please, I have a question.
Okay.
On this appropriation account, this balance brought forward of 200 naira, how did they get that? Because it's
when you know how they, you know how balance brought forward there is not 200, it's supposed to be 2,000.
Okay, okay. But I wanted to say that.
It's supposed to be 2,000. I think it's a typo error.
Thank you. Thank you.
Okay. So, what am I saying? Okay, this particular aspect is clear. So they now said Oshun and Omoluabi are in partnership sharing profit and loss equally. The following was taken from their books. That is example 3 now. For the year ended at 1st December 2014, capital account, Oshun is 18,375, Omoluabi is 105,350.
Sorry, what
So,
page are you reading? Are you reading from?
Same
I think
page, page wise, down of it, same page.
Page
Page
54
what?
now.
The same page, example 3.
53, 54. Maybe the person
Where
is
you
just joining.
corrected the 2,000.
So example 2.
Example 3 now.
So let's go to should we solve this example 2, or let's jump it? Let's just explain this example. Okay, no, example 3 now. Example 3, Oshun and Omoluabi are in partnership sharing profit and loss equally. The following was taken from their books for the year ended 31st this. They've already shown us their capital. They also shown us the, what do they call it, current accounts. They show us the drawings accounts and then profit for the year. Profit for the year, that is from the income statement, is 123,000. So now the agreement of the partnership are Omoluabi shall be entitled to 2,100 monthly salary. So it means only Omoluabi will be collecting salary. You see what I'm saying, right? So interest on current account and drawing shall be 15% and 10% respectively. Although they're supposed to put their names, Oshun and Omoluabi, respectively. So 5% interest is allowed on their capital accounts. So the capital account they have contributed, which is, where is it? The capital account is 18,375 and 105. Is this? So they now said, Omoluabi is also entitled to a 5% commission on profit after commission had been deducted. So prepare appropriation account. Which one do we say is the appropriation account? The account that will be used to share the profits.
Share profits between partners.
Yes, between the partners. So they also say prepare partners' current accounts, current and capital accounts. So you also prepare the current account. And what do we say current account is? Current account is the account that show the transaction between a particular partner and the partnership business. While capital account is the account of individual, is like a ledger account for that particular partner. So when we get there, we're going to see what is happening. So this is what we're going to do. After arriving at the profit for the period. So in the solution here, you have in the appropriation account, we have on the credit side, the first item that will be coming in is profit for the year, which is 123,000, as we have gotten from our question, profit for the year. So they are now telling us that, they told us that interest on drawings, Abi, for those partners. So they will be, it means the partners will be contributing to the partnership business. Rather than getting from the partner now, they will be giving interest. So that interest is a profit is an income to the partnership business. But it is a charge on the partners, but a profit to the partnership business. So it will now be added to the profit. It means the profit has increased. So they said what do they call it? Is somebody is 15%, So 15% of 18,375, what do we get? 18,375 times 15%, 2,756. Okay, sorry. We are talking about drawings now. How much drawing did they collect? Drawing is 21,000. 21,000 times 15% is 3,150. So that means Oshun is 10%. For we to have gotten 2,100 here is, it means Oshun is 10%. So 10% of 21,000 times 10% is 2,100. Then Omoluabi.
It's 10%.
So let's look at the question again.
Hello, sir.
Hello.
Please, can I just draw us back to make a little correction there? The percentages given, the 15% is given on drawings, while 10% is given on interest. That's current account.
Okay. Yes.
Thank you. Yes, it's not on individual.
Sorry. Yes. Interest on current account is the 15%, while 10% is for drawings for both of them. So, and then 10% of 21,000 is 2,100 for Oshun. Then Omoluabi is 385, which is 10% of 3,850. I think this one is clear up to this point. So now, the profit of the organization has increased, that is the partnership business, to 125,485. So we'll now go to the distribution now on the debit side. From the distribution, we'll first capture from the question, they say Omoluabi shall be entitled to 2,100 monthly salary. We'll take monthly salary of Omoluabi. If he's taking 2,100 monthly, 2,100 times 12 will give us 25,200.
25,200.
Is that one clear? Yes. So in the note B, additional information there, note B, interest on current account is 15%. Okay, let's go. Interest on capital is 5%.
Hello, sir.
Hello. Interest
Please,
on capital.
Can I just make a humble appeal? You know, we are borrowing, if I must use the language, please, it's just a second to 9 o'clock. Let's respect this and maybe leave this class down running it and we don't grab it, then allow the main class to hold. What do we think we? Because it's still a long way to get it done.
It's true. We need a class like tomorrow also.
Really
Final
tired.
moment.
The fact. Thank you.
In fact, I was about making that.
She's right. It's just 1 minute. So let's make a quick decision.
Well, thank you.
No, we will decide on the platform. Let's just leave the platform.
No, let's just decide now.
No,
Like,
no,
what
time has
time?
gone.
No, the time.
Let's
Let's respect
gone.
them.
Let's
The 9
respect
has
them.
clicked already. Mr.
Please.
Abdulaziz, thank you, everyone.
They have
Thank you. Bye
started
bye.
discussing class.
You know, thank you very much. It's
you
I
so
was carried
much.
away. I was not even checking the time.
I just
I was not
realized
even
that.
checking the time. I just
Please end the class. End it.
End the class. Yes.
thank
we
you.
can remain now.
Thank
Ending the
you.
class, they will join.
Thank you, Madam Kelechi,
God bless you.
for calling our attention to this.
You let end the class.
Now I'm
I
always
was about saying that.
So we'll decide on the time we'll be doing tomorrow, right?
Yes. Can even start earlier.
We'll discuss that later.
Right.
Sincerely, I'll prepare the area so that we will not have any break. Hello. I said, sincerely, I'll prefer the earlier so that we will not have any break in between, so that we can do everything and achieve. So I also want us to look at some past questions on this partnership
and then whatever we can lay our hands on again, so that we know that gradually we are moving towards, preparing ourselves towards the examination. Thank you all. We're ending this class.